Hi everyone, and welcome to the official launch of my new channel called Liberty Financial Corner. My name is Uzuko Sukuza, and I'm a financial advisor from Liberty. Okay, now this video covers unit trusts and how unit trusts lend themselves to collective investment schemes. Okay, now someone asked me to, to give them an explanation as to what unit trusts entail. So this is what this is the official launch of the channel, and I want to explain what unit trusts entail. Okay, now when we get to get started, we need to discuss equity funds. Okay, now equity funds form part of unit trusts. Okay, now investors must analyze their needs and priorities before making any decisions about unit trusts. Okay, different types of funds are available to suit the various needs. Now there are 8 forms of unit trusts, which I'm going to be covering today in this video. These are the 8 unit trusts. Okay, there's general equity funds, there's fixed income funds, there's balanced or asset allocation funds, money market funds, index tracker funds, active and passive management, funds of funds, and feeder funds. Okay, let's get started. General equity funds. Now these provide growth by investing in a spread of different shares across all sectors of the JSE, that is the Johannesburg Stock Exchange. Okay, first-time investors would be wise to invest in one of these well-established general equity funds, which usually perform better than many other forms of popular savings and are less risky than specialized funds. Now, an example of this type of fund is the Standard Equity Fund. The second equity fund that we should talk about, or the second unit trust I should talk about, is the fixed income fund, or fixed income fund. These are reasonably secure investments in bonds, government stocks, and fixed interest securities. They provide regular payments rather than high capital growth over a long period of time. Now, income payments from all unit trust investments can be twice a year or every quarter. Okay, now investors can also request automatic reinvestments instead. Now, an example of this type of fund are the Standard Bond Fund and the Standard Income Fund. Okay, the next one I want to talk about is balanced and asset allocation funds. Now, these funds invest in a mixture of equities and fixed income securities. They provide balance, or rather, they try to balance the goal of higher returns against the risk of losing capital. Most of these funds allocate money among different types of assets according to a formula. Aggressive funds hold more equities, while conservative funds hold fewer equities than bonds. Examples of this type of funds are Standard Multi-Asset Growth Fund and the Standard Multi-Asset Cautious Fund. Next, we have Index Tracker Funds. These funds aim to track the performance of a specific index, such as the FTSE and the JSE, Africa Swiss 40. The value of the unit trust will rise or fall in line with moves in the index it is tracking. Now, index funds typically have lower costs between actively managed mutual funds because the portfolio manager as many doesn't have to do as much research or make as many investment decisions. Examples of this type of funds are the OneVest SA Property Exchange Trader Fund and the One Invest Swiss 40 Exchange Fund. Next, we have active and passive management funds. Now, these are basically active management funds means, or active management means the portfolio manager buys and sells investments attempting to outperform the return of the overall market for another specified benchmark. I'm sorry, there seems to be cut off on the one side. I was expecting that. I'm so sorry about that, but I will be giving an explanation. So, active management, to carry on from the previous information, or to carry on, passive management involves buying a portfolio of securities designed to track the performance of a specified benchmark index. The fund's holdings are only adjusted if there is an adjustment in the component of the index. Okay, yeah, that's essentially what. Next slide. Now, funds of funds. These funds invest in other funds like balanced funds. They try to make asset allocation and diversification easier for the investor. The total expenses ratio (TER) for funds of funds tend to be higher than standalone unit trusts. Before you invest, you must understand that these funds are investment goals to ensure you are comfortable with the level of risk it offers. Even if two funds are of the same type, the risk and return characteristics may be or may not be identical. Examples of this type of fund are standard moderately aggressive fund and the standard conservative fund of fund. The spelling there, no? Okay, okay, okay. Now, feeder funds. A feeder fund is one of the several funds that put investment capital into an overarching umbrella fund called the master fund, for which one investment advisor handles all portfolio investments and trading. Now, the two-tiered investment structure of a feeder fund and a master fund is commonly used by hedge funds as a means of assembling a larger portfolio account and pooling investment capital. Now, profits from master funds are then split or distributed proportionately to the feeder funds based on the percentage of investment capital they have contributed to the master fund. Okay. What are the advantages of investing in a unit trust? Okay, the following are advantages. The most obvious advantage of unit trust is the direct access they offer to the possibilities offered by the JSE to grow wealth. Everyone, regardless of occupation, qualification, sex, or age, can participate in this form of saving in the South African economy. No expert knowledge is needed in selecting, buying, or selling shares. Teams of professional economic and market analysis make decisions on the investor's behalf to ensure, or rather to achieve, capital and income growth. Small, regular monthly investments or single lump sum investments can be made. Disadvantages. Okay. There are now more unit trusts than shares in the world, which makes it very difficult to make choices. Not all portfolio managers can make good returns. Some unit trust charges are excessive. Unit trusts invest in a wide range of securities with different risk profiles. They are less liquid than other types of investments. It takes at least a day to sell a unit trust and receive cash. Okay, so that's that for you. So that's that for now on unit trust. If you guys are interested in learning more, or if you want to invest in unit trust, please give me a call. And my number, that's my number on the screen. That's 068 507 1610. Or you can email me at zuko.sobuza@leblink.co.za and I will get back to you as soon as possible. Okay? If you guys enjoyed the value and the information, of it in this video, please like and subscribe, and I'll be sure to make more videos for you guys. But for now, cheers, and I'll see you in the next one. Bye.